Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Thursday, August 11th, 2016. Equities markets have been closed for approximately a half hour, and they are closing at a new historical record high for the Dow Jones Industrial Average, Standard & Poor's, as well as the NASDAQ. This is the first time that all three have closed at new record historical highs since, I believe, 2000. Incredible day in the marketplace itself. Now, the Dow Jones Industrial Average currently is up 117 points at 18,613.52. That is a 0.6% rise and quite formidable. We'll definitely want to take a look at a Dow Jones Industrial Average chart. Standard & Poor's also closing at a new record high, up 8.5 points, call it 0.4% in terms of the net gain at 2181, high 2185. So it did close a couple of points off the high, but most impressively is the fact that it closed at a new record high. Lastly, the NASDAQ. We're looking at the NASDAQ 100 E-mini, but as you can see, even on this chart, we've closed at a new historical record high, and this is the market that hadn't hit these new record highs till just recently, considering the meltdown that we had, of course, in 2008, and the bubble, the tech bubble that occurred prior to that is what really kept that NASDAQ index down. But according to some experts, due to a rotation in terms of what is favorable, we've seen the equities complex as a whole, do rather well. Let's take a look at our first chart. So traders, as I said at the beginning of the show, absolutely no doubt a risk-on scenario. Equities really excelling over this last couple of weeks. We're looking at the NASDAQ 100 E-mini. Now, in order to kind of fit everything onto one screen, I had to go to a monthly chart. It's obviously not something you would trade with, but it's excellent for looking at historical precedent in the market. Now, on a monthly closing basis, and we'd have to go to weekly to see where it closed, but the highs that we achieved, of course, now this is back in 1999. Let me draw it as straight across as I can. We're really not even touched throughout the better part of the 2000 cycle itself. And as you can see, it doesn't really approach hitting this point again till really the beginning of 2015 last year. Traded pretty much sideways. When you look at the monthly chart, you had new highs that came in, but you also had some pretty extreme lows, and those all occurring within the same year, in many occasions a month apart. You can see this high here going down to this low here. These are tremendous swings in the market. Now, when we look at the all-time high, and this is not on a closing basis, but on an intraday basis, we are just shy of that. But in terms of a closing high, you've got these closes right in here, and of course this close right in here, and there's absolutely no doubt we broke through that last month. You can see that with this candle right here, and then obviously today's action flies well above those previous tops here, and that's what gives us our new record high, all-time record high in the NASDAQ. Standard & Poor's also closing at a new record high. Now, we've been focusing on this daily chart, and we've been talking about a pattern that was really coined by Steve Nissan, called a scouting party. He's the one that came up with that. And in essence, what happens is, as a market hits a new high or a new low, and then has the inability to kind of break through it. In other words, you see some real headwinds, and the fact of the matter is that it is really strong resistance in the case of the Standard & Poor's. Market comes down. The first test of that market is what he calls a scouting party. It's really where the bulls or the bullish factions have moved that price point higher and are really going to test the fortitude of the bearish faction to see if they can come in and sell that market and bring that market back down. If they cannot, the term that Steve Nissan has coined for that is simply called a beachhead. So on the subsequent days, and that's these days right in here, you have the market trading above that former resistance line, and that's really having that become part and parcel a support area now, and this is what he calls a beachhead. So we've absolutely formed our beachhead. We've completed the pattern of a scouting party. We now have a new sheriff in town, so to speak, and that's an area of support, not resistance, sitting around 2170. Dow Jones Industrial Average, as we said, also closing at a new record high. You can see that. This is a standard candlestick daily chart. Absolutely no doubt this tremendous spike up after these really consolidating days that we've had for the beginning of the week, Monday, Tuesday, and Wednesday, today being Thursday, and that's following a dramatic rise because of that jobs report that came in a week ago Friday. Lastly, I want to take a look at oil, because a large part of this most recent leg of this rally is being directly attributed to crude oil. Crude oil definitively coming up today, up about 4% on the day, $1.69 gain per barrel at 43.40. When we look at this particular single candlestick day, it is a pretty impressive day, but it does come right up to what we are looking at as our current resistance area, which is 44. And as you know, between 42 and 44 has been my mark. My sense is that it would trade sideways to lower once it hit these areas. Now, we do have this low down at 39. I do want to adjust our cascading channel lines to better reflect the most recent activity. We'll go in and shorten that 1 second. And so traders, I've just done that. I've shortened the cycle. It was sitting at around 70 days. I shortened it to about 44 days to really only look at this recent decline. When we do that, we have clear and defined downward bias channel lines. We have a mid-range in here, our upper and lower band. Interestingly enough, as this market tracked down, this lower end of the band is where it found support, which also comes in at about 39. Market tracks higher, comes right down to the midpoint line, and has a high just at that upper level boundary. So my sense is that even with this tremendous clip up today, as I said, about a 4-point gain, I wouldn't be surprised to see it continue to trade within these channel lines. And that being said, if that is the case, we will have a scenario something like where it moved up to the top, to the bottom, to the top. We should see a slow drifting back into the channel line. Of course, a breakout above this channel line is telling us something significant has changed. And of course, we would simply look to adjust our basic models and forecasts. But until that happens, we still stand pat with our ideology that we will see sideways to lower pricing. In crude oil, our target price remains $42 to $44 per barrel. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.